Listen up because we're talking NIO. This electric vehicle maker got everyone excited. They were dubbed the Tesla of China. The stock soared, but then, bam, it crashed back down to earth. What happened? NIO's stock has been on a roller coaster. It's down big from its highs. Investors are worried. They see slowing growth in China's EV market. Competition is heating up. Tesla's slashing prices. That's putting pressure on everyone. NIO's also dealing with supply chain problems. And let's not forget about the global chip shortage. It's impacting car production worldwide. These challenges have made investors hit the brakes on NIO. But hey, don't write them off just yet. NIO's got some tricks up their sleeve. They're fighting back with new models, a new factory, and innovative technology. NIO's stock price is all about one thing: growth. Investors want to see those delivery numbers climb. But lately, NIO's been hitting a few speed bumps. Delivery numbers have been inconsistent. Sometimes they beat expectations, other times they fall short. This has made investors nervous. They're starting to doubt NIO's ability to keep up with the competition. Remember, Tesla is the 800-pound gorilla in the EV space. They're ramping up production like crazy, and they're not afraid to undercut the competition on price. This puts huge pressure on NIO. They need to prove they can sell cars, lots of cars. Otherwise, investors will start looking for the next big thing. Alright, enough with the doom and gloom. NIO isn't just sitting around, they've got a plan, and it's all about expansion. First up, they're building a brand new factory. This mega factory will be in NIO Park, China. It's going to be massive. This will help NIO build more cars faster. They'll be able to meet that growing demand, but wait, there's more. NIO's launching a new brand called Onvo. This brand will target budget-conscious customers. Think of it as their answer to Tesla's Model 3. Affordable EVs are where the real growth is. NIO wants a piece of that pie. NIO's also expanding into Europe. They're already selling cars in Norway. More countries are on the horizon. This international growth is crucial. It reduces their dependence on the Chinese market. Section 4, Battery Swap, NIO's secret weapon. Now let's talk about NIO's secret weapon, battery swapping. This is a game changer, people. Instead of waiting hours to charge your EV, you can swap out the battery in minutes. It's like filling up your gas tank. NIO's building a network of battery swap stations across China. They're even expanding it to Europe. This gives them a huge advantage over the competition. No more range anxiety, no more long charging times. This technology is also incredibly cost-effective. NIO customers can actually lease their batteries separately. This lowers the upfront cost of buying an EV. That's huge for attracting new buyers. Battery swapping could be the key to NIO's success. It sets them apart from the competition, and it solves a major pain point for EV owners. Section 5, Green Shoots, deliveries and profits on the rise. Don't count NIO out just yet. There are some green shoots emerging. Their delivery numbers are starting to rebound. They just announced a record month for deliveries. That's what we like to see. And guess what? They're getting closer to profitability. NIO's margins are improving. That means they're losing less money on each car they sell. This is a very positive sign. Now, they're not profitable yet, but the trend is moving in the right direction. If they can keep this momentum going, NIO could be a very different company a year from now. Section 6, roadblocks ahead. Tariffs and a shaky economy. But hey, let's not get ahead of ourselves. There are still some serious roadblocks ahead for NIO. The global economy is looking shaky. Inflation is still a problem. This could hurt demand for EVs. And then there's the trade war between the US and China. Those tariffs are no joke. They can make it more expensive to import parts and export cars. This adds uncertainty to NIO's future. The competition in the EV space is only getting fiercer. Tesla is a powerhouse, and traditional automakers are finally getting serious about EVs. NIO needs to stay ahead of the curve. Section 7, the bottom line. Is NIO a buy? So, the big question, is NIO a buy? Well, it's not for the faint of heart. This is a high-risk, high-reward stock. There's a lot of potential here. But there are also a lot of challenges. If NIO can execute on their plans, this stock could take off. They've got the technology, they've got the vision, and they're expanding aggressively. But there's no guarantee they'll succeed. The EV market is still evolving, and NIO needs to prove they can compete with the big boys. Bottom line, NIO is a gamble, but it's a gamble that could pay off big time. If you're a risk taker, NIO might just be the stock for you. But remember, don't bet the house.